All right. Let's make sure we're on live here. We're looking set up. Let me go to my YouTube, make sure I can see this. Mm. All right. All right. So basically, what I'm about to do is here's our what's today? Today's Wednesday. So, all right. So I'm gonna just start off with marking out what I see on the daily time frame, from a structural standpoint to a phase standpoint, potential pattern standpoint, Fibonacci, risk to reward, all the good stuff, and then we're gonna go into fundamentals. So I see this downtrend, and what I'm currently marking out is this valid lower high. Matter of fact, this valid lower high. This valid lower low. This valid lower high. The valid lower low. And so from a structural standpoint, this would have been what we needed, and that's exactly what it did. So what we needed was this to either be respected or broken to know what's happening next with price. It was clearly broken, small retrace, and push up towards this area. Now, this is beautiful. On the daily time frame, I'll call it like this. On the daily time frame, simply put, we have a break of valid downtrend structure, lower high, push phase to the top with 1 day of exhaustion. 1 day of exhaustion. So from on the daily time frame, we're post push phase in an exhaustion phase to see if we're going to get a respect or a break to a higher level. Now on the 4-hour time frame, analyzing this uptrend structure, higher high, exhaustion, push phase, retest, go, higher high, exhaustion, retest, go, higher high, minor pullback, higher high up here. This is the highest high And then we have our currently made higher low support level, which has not been validated. In my experience, invalidated levels always have a high potential to be broken to make a new level. So this is an invalid 4-hour higher low. And here we have very clearly a valid 4-hour higher high. Very clean, very simple. Now, the fact that this was marked out on the daily, let's go back to the daily to see if this level was to break, the next highest probable level to come to, or you know what I mean, like the next true target is up here, but I'll go ahead and mark out this one for now, because then you have that one and you have this one. It just so happens that this one comes first because there's a clear exhaustion there when it gets above there. So I'm gonna delete this one for now, because if it was to break this higher high and this level here, we can come here basically. And then if it was to, let's say, if it was to break this higher low, this invalidated higher low, this would be the next level to come to, then this one. All right, so that's what our 4-hour time frame looks like right there. That's our 4-hour. Boom. I'm gonna save this one. Screenshot and save. Now, what I see happening here, knowing that this is an exhaustion phase, our opportunities come in. It's already came here and it's already made here. So our opportunities come in to say we can get an exhaustion back down to this level for a double top. We could get a break and a retest of this level. We could get a bounce off this level for a double bottom, and we can get a break and retest of this level. Feel me? Area 1, area 2, it can either bounce or it can break. We'll call this area 1 right now. Area 1, it can either respect for a double top and exhaust down to this level. Same thing at area 1. It could break this level, definitely exhaust, because that's what it always does after making a higher high or higher low. Definitely exhaust, potentially retest that level with the retest to continue up. If you want 3 scenarios at this one level, it can also break this level, right? It can break this level, create a support, double top, and break back in based off of this level being, you know what I mean? It could be very promising up there. But That'll be the same at this level. It can come to this level. It can simply bounce for a double bottom, come to this level, break, retest, continue. It come to this level, break, fake, gone. Okay, I think that's something that you definitely got to stay keen to, right? Which the break and fake will be the third. That's crazy. All right, I might have to talk about that for a second. So my thinking is, you have three scenarios. I think I always kind of, not always, but I had the habit of thinking about it in one, in terms of, if it comes to this major high, I mean, my fault in two. If it comes to this major high, it could break it, retest it, continue. One, it can come to this high, respect this high, not even break it, fall. Or it can come to this high, break it, fake out it, come back and validate this move after saying fuck you to this move. Which is why I would rate for the retest and not the breakout, but the retest and continuation. But then again, that could also end up to be, once again, once it breaks out and fakes out, now you have this opportunity of, okay, well, that level right there could be broken to revalidate this one, or yes, it could do that. You know, so that is very interesting. But yeah, same thing here. So I want to keep that in mind in terms of, you can get a bounce, a break, and a fake. For real, for real. Yeah. But that's where risk management, making sure, you know what I mean? So at that point, I mean, you know, knowing that this is the push phase, higher high, one leg of exhaustion, a nice little double top here, but one leg of exhaustion, coming back up, potential second leg of exhaustion to come here, actually break it this time and go there, which will honestly be very nice. Real quick, let me hide everything and go to the weekly. Very curious. Yeah, and I mean, at the end of the day, not only is it a weekly high, which of course it can continue to rise, but not only is it a weekly high, damn, but it's also running into this resistance level to the left, which will be a weekly break of structure back in. Very interesting. Because you see, you had the breakout, came right back in, and now it's back in this zone. Such as, if I was to even go to the line chart and grab one of these bad boys and see that. So you have 1, 2, 3. I'm going to go to the middle and go right here. And you see, you feel me, double bottom, respect, 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 breakout, back in. Now that it's back in, you definitely got to ask yourself, you know, because this is the back end point. Very interesting. This is the back end point here, and it even retested it. That is crazy. I'm gonna keep that there for now. And yeah, this is not to be overthought. We already understand. We're gonna look at the fundamentals of gold as well. Here, I'm gonna make this a fucking purple or something, right down the middle. But yeah, we're gonna check the fundamentals as well, because we already understand what's going on from a technical standpoint and what could potentially happen at these major levels. But now also from a technical standpoint, here we'll go to the 1 hour real quick just to see what that could look like. I mean, at this point, it's action in these zones. Not only do I not really want to take action before my session, which is the New York session, pre-New York and things like that, but I also don't want to act or react at a level that is not at one of these majors. You know what I mean? Which has to do with a 4 hour structural point, which is very strong structure. So strong structure equals strong reaction in whatever direction it wants to play. But yeah, at this point, you know, very, very regular market structure. I mean, even right here was an invalid. This was the invalid that I was talking about. Invalid higher low, broken, double bottom, retest, fuck you, fake out, gone, back to the top. Like this whole fuck you move, back to the top. It's funny, man. Pretty much directly aligns with this wick over here. But yeah, but like now we have an invalid. See, like this is a 1 hour invalid. Was good for, I want to measure some shit. This 1 hour invalid was good for 100 pips. 100 plus pips with a stop loss. Definitely having to go above the high. You know, shit, 100 pips. So that was a 1-to-1. But that's why I don't take trades low for me. Because, like, honestly, for me, the risk to reward is not worth it. Like, why would I take a sell low when I could take a sell high? Why would I take a buy high when I could take a buy low? You know what I mean? That's how I want to trade. So, as of now, we have our major levels at that point. Pretty much was done on the 4 hour time frame. Stop there. And then come to what we need to come to. Hey, bitch. Alright, news. We're going to click on news and we're going to read through some fundamentals to get kind of a deeper understanding of what's going on besides just looking at price, which is great because, you know what I mean, at this point, now that we know what price looks like right now and I know what levels I'm going to play off of, I could see a potential double top here. I could see a fake out, continue back in here, double top. I can see a move down here, double bottom. I could see a move down here, you feel me, break, retest, continue. I could see a fake out, double bottom, back up to this high and potentially greater highs. I could see those things. So at that point, now what's going to fuel those things to come our way? What's going to fuel the action behind those things? So I'm going to go here. I'm going to grab a quick drink, stretch my back because I'm currently sitting on my meditation pad and I'm not sitting up. But I'll have a desk in here. But yeah, let me go get a drink real quick and I'll be right back. All right. What article do I want to read? So I'm going to start from here, move up. So it says U.S. stock futures move lower as strong rally fades. Got you. U.S. stocks fell as growth changed rally fades. Charged rally fades. Stocks again dip. Yields climb as rate hikes seem to stay the course. Gold, copper rally eases as Fed downplays pivot hopes. Gold and copper prices were muted on Thursday, pausing a recent rally after hawkish comments from Federal Reserve officials and signs of strength in the U.S. economy dented expectations for a dovish pivot by the central bank. Okay, so thoughts of a dovish pivot were in play. Metal markets rallied strongly this week after weak manufacturing data in the United States. Okay, one more time. Metal markets rallied strongly this week after weak manufacturing data in the United States drove up expectations that the Fed would ease its hawkish stance to prevent more economic disruption from rising interest rates. That makes sense. So the thoughts in the play, once again, were after some weak manufacturing data in the United States, what they're saying is that weak data drove up expectations that the Fed would ease its hawkish stance to prevent more economic disruption. Yeah, okay, if that's the rumor, then people are buying the rumor. But Fed officials reiterated the bank's hawkish stance on Wednesday. Better than expected service sector data and signs of a robust labor market also showed that the underlying United States economy remained strong, giving the central bank enough space to keep raising rates at a fast pace. Spot gold rose about 1% to $17.18 an ounce, while gold futures did this, blah, blah, blah. Both indicators fell slightly on Wednesday. The dollar also resumed its upward trajectory, breaking a nearly 6-day losing streak and rallying nearly 1% on Wednesday. Focus now turns to upcoming United States non-farm payrolls data on Friday to gauge the strength of the jobs market. So now I'm gonna come here to see what their expectation is. I just want that thing to load. Then I want to refresh it a little bit. So on Friday, non-farm NFP, they're anticipating a negative, which is not so good. Employment rate staying the same. They're expecting a less than, where'd that thing go? What they say is actual greater than forecast is good for the currency. So they're anticipating average earnings to stay the same, unemployment rate to stay the same, employment change, they're looking like a large positive number. And non-farm employment change. Yeah, very interesting. What's to come tomorrow? Unemployment claims, they're expecting those to be higher. FOMC. Federal Open Market Committee. All right. Still, gold retained most of its gains made this week, trading comfortably above 1700 level as pressure from a hawkish Fed somewhat eased. The yellow metal also benefited from a measure of safe haven buying in recent sessions as investors feared a deeper economic collapse, particularly in the UK and the Eurozone. Demand for physical gold is also expected to rise in October thanks to a festival in India, the second largest gold importer in the world. but bullion prices are still trading well below annual highs as rising interest rates across the globe greatly increased opportunity costs of holding gold, which offers no yields. I think it's crazy how India, that's what they said, right? Hold on, let me see. Demand for gold festival in India. Yeah, I think it's crazy how in India they're about to have a festival for gold, physical gold. Yes, or some sort of festival, and gold is trading at a decently, like, you know, it's at least what, like 5,000 points away from the high, or at least $500 away from the high. I mean, shit, $10 is already 100 points. So I mean, shit, $500 is definitely like 5,000 points. It's like 5,000 points away from its high, which is crazy. And I just think it's crazy if they are buying and trading gold over there during this time frame. I wonder if they have a great opportunity to get gold at a decently low price, you know, relatively low, and ride it back up and gain some value on it. Who knows, you know? Who knows? Nice. All right. Knowledgeable. Let's look at obviously this bad boy been mad bullish. Might as well just start from the weekly. Looking at the weekly, just like regular old structure. You see this weekly low? You see this break? You see this exhaustion? Let's see if that bitch wants to come back up here and let the US dollar double top while the freaking gold, let it go up there and double top, and let gold double bottom, or double top and go down. Structural break, structural rebound, a gap down, daily gap down. Look where it gapped down to. That is crazy. But yeah, obviously on this one, structure has been down on the dollar, but we do definitely see strong push down and a strong push right back up. A retest, double top of that. So let's see. I don't know. Let's see if that wants to gain more value going back up. Yeah, we do got NFP coming though. And it's funny because it's you see the downward movement, and it kind of goes in with the fears that are being experienced. So that's the interesting thing. So what I'm thinking is, if this level is to break, if I can get a low, meaning it comes from a high, if I can get a low correct pattern above this level, we'll take buys. At this level, signs of respect And I would like to say, to keep it congruent, I'm going to say it out loud to see how it feels. If I can get a lower high made below this level, I'll take a sell. So if I say, if I can get a higher low above this level, I'll take a buy. If it wants to stay below this level, if I get a lower high below this level, I could take sales back down to that level. And the range itself, just from top to bottom right here, is over 100 pips. And above this level, over 100 pips. And below this level, it gets a little dicey in here, I'll be honest, it really does. But if I'm thinking overall long term, definitely obviously 100 pips as well. So I'll keep it 100. I'll even write myself a text note to say buys at higher low above key level. We'll go buys at creation of higher low above this level. Damn, so that's okay, so it's definitely the same. And then that means the sales should be the same. If I go here and say sales at creation of lower high below this level. Yeah, I want that. I want to see what that looks like. I didn't even click on that motherfucker. All right, from there, we curve, let some things play out, and then go from there. And we're